Hello, it's Thursday the 19th of April 2012 and I'm Martin Smith with a daily outlook from UFX Markets. Wall Street closed on the negative side as the Dow declined by 0.63%, closing at 1303. The Nasdaq fell by 0.37%, closing at 3031, and the S&P 500 lost 0.41% to close at 1385. Technically, as long as the S&P 500 remains below the key resistance level of 1388, the trend will remain bearish. The US dollar gained versus most of the majors besides the cable. Concerns about the European debt crisis pushed investors away from higher yielding currencies. Today, unemployment claims are expected at 370,000 versus 380,000 previously, and existing home sales are expected at 4.62 million versus 4.59 million previously. Gold fell by 0.50%, closing at $1,641 an ounce, and crude oil slumped by 1.5% after crude oil inventories came out at 3.9 million, much more than the expected 1.5 million. The euro-dollar pair has been fluctuating in a narrow range over the last 3 days, unable to determine its direction. Technically, only breaking the fixed range will fuel the pair for further movement. Breaching the resistance level of 132.20 will extend the gains to 134.40 areas. Breaking below the key support levels of 129.70 will extend losses to 136.40 zones. The pound was among the single currencies which posted significant gains versus the greenback on positive macroeconomic data. Technically, breaking the next resistance area of 160.40 will extend the gains to new fresh highs around the 160-180 zones. The Kiwi now, this declined versus the dollar after weaker than expected CPI data released each quarter, coming out 0.5% worse than the expected 0.6%. Breaking the key support area of 080.90 will push the pair lower to 080.20 zones. However, breaching above the key resistance levels of 082.75 will extend the gains to 084 zones. Well, that's it from me. Be sure to visit us at UFX Markets for all your online trading needs.